The uranium market just hit $100 a pound for the first time in 2 years, and Wall Street is barely talking about it. Most people are still arguing about crypto and meme stocks, while one of the most powerful commodity setups in a decade is unfolding quietly in the background. I've been tracking one small-cap miner sitting on what could be the most important new uranium mine in North America, and the window to get in early is closing fast. I'm going to tell you exactly what it is, but first, let me show you why the timing on this is almost perfect. Let's go back to 2011. After Fukushima, the entire nuclear industry went dark. Reactors shut down, uranium prices collapsed, and miners went bankrupt or went home. For over a decade, almost nobody invested in new uranium supply. That underinvestment didn't just slow the industry down, it created a structural hole in global supply that is only now becoming impossible to ignore. The world kept running reactors the whole time, burning through stockpiles, and now those buffers are running thin. Nuclear power is no longer the dirty word it used to be. Governments worldwide are racing to build new reactors as fast as they can permit them. Over 60 new reactors are currently under construction globally, with hundreds more in planning stages across Asia, Europe, and the Middle East. AI data centers need 24/7 clean baseload power, and solar and wind simply can't deliver that. Nuclear can, and utilities know it. The IEA forecasts annual nuclear investment will triple to $210 billion by 2035. That money has to go somewhere, and miners are first in line. Here's the problem nobody wants to admit. Mined uranium covers less than 75% of current global reactor requirements. That gap gets papered over with stockpiles and secondary supply, but those reserves are shrinking every single year. Think about what that means. Every year the world consumes more uranium than it digs out of the ground. And the difference gets smaller and smaller until one day utilities wake up and there simply isn't enough. Meanwhile, global nuclear capacity is on track to nearly double to 746 gigawatts by 2040. Demand is going vertical while supply is barely flat. The US government just designated uranium a critical mineral that puts it in the same strategic bucket as rare earths and lithium. The DOE committed $2.7 billion to expand domestic enrichment, and the Trump administration pledged $80 billion toward new reactor builds on American soil. Canada, the UK, France, and Japan have all made similar commitments. This is a coordinated global pivot back to nuclear that no single policy reversal can undo. This is not a maybe. The policy infrastructure for a sustained uranium bull run is already being funded and built right now. The company is Denison Mines, ticker DNN, a Canadian uranium developer sitting on what's called the largest undeveloped uranium project in the Eastern Athabasca Basin. The Athabasca Basin in Saskatchewan is the Saudi Arabia of uranium. It hosts the richest, highest-grade deposits anywhere on the planet. 2 months ago, Denison made their final investment decision, broke ground in March 2026, and the clock to first production is now officially running. Analysts have a strong buy consensus, with a median price target of $4.95. That's over 44% upside from where it's trading right now, around $3.23. Their flagship asset is the Phoenix ISR mine. ISR stands for In Situ Recovery, which is a cleaner, cheaper, and faster way to extract uranium compared to traditional open pit or underground mining. Instead of blasting and hauling rock, you inject a solution underground, dissolve the uranium in place, and pump it back to the surface. Lower cost, smaller footprint, faster to build. Phoenix went through years of regulatory hurdles, but in February 2026, it cleared everything. Provincial approval, federal license, the works, and construction started immediately. The target is first production by mid-2028, 2 years away, and Denison holds a 95% effective interest in Wheeler River, where Phoenix sits. The initial capital cost is $600 million. That's a 20% bump from the 2023 estimate, but fully inflation adjusted and backed by near-complete engineering at the time of the decision. Here's the part that genuinely surprised me. As of late 2025, Denison had over $700 million in cash, physical uranium, and investments, meaning they can fund the entire build without needing to go hand-in-hand to capital markets. No dilution risk, no dependency on credit markets, no financing cliff. There's also the Griffin deposit sitting inside Wheeler River, a separate underground asset with a pre-tax NPV of $1.43 billion that the market is barely pricing in right now. I want to be straight with you. This company makes almost no revenue today. It's a pre-production miner whose entire value is a bet on Phoenix getting built and uranium staying high. If uranium prices fall hard or construction hits serious delays, the stock will feel it. There's also a judicial review application pending on Denison's environmental approval. It probably goes nowhere, but it is a real overhang sitting in the background. And uranium prices can be volatile. They swung from the low $60s to over $100 in a single year. So if financial speculators step back, the spot price can drop fast and take the stock with it. So who is this stock actually for? This is not a trade, it's a 2-year thesis. You're essentially buying a construction project and betting that the team executes, uranium prices hold, and the world keeps pivoting toward nuclear. If all three of those things happen, DNM at $3.23 looks extremely cheap relative to what this company becomes in 2028 when Phoenix is producing. The macro backdrop for uranium is the strongest it's been in a decade. AI, nuclear renaissance, coordinated policy support, and a supply gap that cannot be closed overnight no matter how much money gets thrown at it. DNN is a high-risk, high-upside play for patient investors who believe Phoenix crosses the finish line, and right now, the market is giving you a discounted entry before a single pound of uranium has been produced. This is not financial advice. Do your own research. Size your position to what you can afford to lose, and understand this is a long-duration bet. Drop a comment if you want a full breakdown of the Griffin deposit next, because that second asset alone might be worth more than the entire company is trading for today.